Listen, the market's probably not going to crash just because of the 3 bearish divergences happening today. But we should be aware of them, especially near the all-time highs, because the last thing we want to do is take the suckers long and buy the tippity top of the move with terrible trade location. So welcome back to the Trade Brigade Midweek Show, where we'll take a look through all of the data points and we'll build a logical trade plan. My name is Matt, and if you're new here, hit the thumbs up button and subscribe. For additional resources, check out the links listed down below in the description and stay tuned until the end of today's show. I've got 4 additional trade ideas to share with you that you won't want to miss. With that said, let's jump right into the charts. So we'll kick things off on the SPY daily time frame chart, and just for a moment, let's forget about the bearish divergences. Let's start with a very simple question here. What do we see on the daily time frame chart? Is it bullish or is it bearish? Is there anything fundamentally wrong with this chart suggesting that a big reversal is incoming? To me, the answer is nothing here is bearish. This is an absolutely 100% bullish chart on the SPY daily time frame. Reason being is that we have a brand new all-time high close. It's the highest high in the trend count, and the base case has lived on. The base case outlined that we have lows, higher lows, higher lows. In the Saturday update video, we talked about any higher lows persisting over 603.25, keeping the trend up. That's option number 1. Or option number 2 was breaking out over the all-time high to produce some sort of higher high. Now, obviously, that's what's taken place, and seeing that we're on the highest high in the trend count, we know that the market can afford a pullback to set some sort of higher low and will not be in jeopardy of changing the daily trend. So the trend is 100% bullish. Let's take a look at the overall candle structure as well. On today's Wednesday session, we've closed at the highs of today's individual trading range. We don't really have a substantial upper wick or a substantial lower wick that would suggest some sort of imbalance. If we take a look at the Tuesday session, notice that Tuesday looks underneath last Friday's low, and sellers are unable to materialize on the breakdown there. There's absolutely no sell-side momentum intraday on Tuesday, and we'll see this on the hourly chart in just a moment. And then where does Tuesday's daily bar close? At the highs of the trading session. After looking underneath Friday's lows, it falls, or I shouldn't say falls, but recovers back into Friday's range, rallies to Friday's high, rallies through Friday's high through the Tuesday opening print, and closes at the high of day. So candle structure over Tuesday and today's Wednesday session is also, I would argue, 100% bullish with no indication of stronger sellers getting active in this market. Now, in the Saturday update video, we also talked about the potential for a bull trap up here. And this will tie into the sort of bearish divergence in just a moment, but it really has much more to do with poor trade location. So let's talk about the 2-step process that we use to define whether or not something is a bull trap. First, we need some attempt of a breakout. I would say that the market has done that so far. Secondly, we need a failure back down underneath the breakout level. Have we seen that? The answer is no. On the Tuesday session, we opened over the breakout level, the all-time high. We looked under the level, again, sellers fail there, and we close at the high of day. I'd say this is more so a successful breakout than a failed one. On today's Wednesday session, we opened inside of the Tuesday range. There was no attempt from sellers to even test Tuesday's low, so number 2 has not been satisfied from a bull trap perspective. So if this market doesn't really have the opportunity to change in the blink of an eye, and I'm saying, Thursday and Friday, it seems unlikely. We don't have big catalysts on the horizon that are known. There can be unknown catalysts. That's a different story. But as of right now, with the information in hand, the market is bullish, and the market can afford a higher low pullback. So this is where we can start to sprinkle in some of that divergence information. And in the introduction, we talked about the suckers long. We want to avoid the suckers long and buying the highest high in the trend count if we're not prepared to withstand a potential pullback here. So what do I mean by that? If the daily time frame chart pulls back and offers a potential higher low hold here, over 606.75, let's just say it plays out as a double bottom, we Brigade bolt back over the all-time high. Is anything about this structure I've just drawn in bearish in terms of the current trend count? The answer is no, because this is the highest high in the trend count. And of course, as we've expressed, the market can afford a higher low. So if you buy the market at the tippity top of the move, at the highest high of the move, you are not allowed to change your tone to being bearish until a higher low fails to materialize or we produce some sort of lower high on a subsequent retest. So if I go back to the two-step process talking about a bull trap, it's not even enough for the market to fail back down underneath the breakout level, the all-time high, 610. We can also use 609.25, the low of the Friday session from last week. This is not enough. A lower high underneath is not enough because in theory, this produces a double bottom and it really looks more so like a higher low from here to here. So what is enough? What's enough to call this a bull trap? What's enough to say that these bearish divergences are probably causing a firmer breakdown? Of course, it would just have to be the pass through the equal low at 606.75 back into the two-day balance range from Monday and Tuesday of last week, in which case I would take it one step further and say, okay, if this is a balance range, this is a look above, and this is a fail, right back into the midpoint of the balance range. And that's not the best drawn path. Let's try that one more time. Look above, fail, lower high, but then equal low breakdown back to the midpoint of the range underneath 606.75. So when I talk about the suckers long, it's just not being prepared for the potential for a pullback to still remain bullish on the daily time frame charts, and you panic out of this because there's one day down. If there's one day down, but yet we find buyers off of 606.75, nothing has changed from the trend count perspective. In terms of upside targets, let's talk about this from the lens of risk reward. If you're going to long this at the high with a stop potentially underneath 606.75, and I'm not saying that this is the exact trade, I'm just speaking about the sentiment of the market where the structure changes, then in theory we're looking for 2x that on the upside if we're going to trade along the lines of a 2-to-1 risk reward ratio, right? So something loosely along these lines right here, meaning that your target needs to start approaching 627. Now, what's cool about 627 is if we take a look at this as a balance range and roughly double it in the upward direction, it starts to approach that area. It's probably closer to something like 625, but at least this gets us thinking along the right lines. So if this is a true daily balance range breakout, what we want to see for continuation is either just straight up consolidation over the top of the range, seeking continuation in the upward direction, or if the market pulls back, ideally, we set some sort of higher low and then Brigade bolt once again into blue sky territories over 611 here. Higher low being over the key level we've just described in quite great amount of detail here at 606.75, right? So those are the two things that I'm thinking about that keep this chart bullish. And of course, as we've mentioned, if this fails back in the downward direction, we see this underneath, lower high, and an equal low breakdown, I will raise my hand and I will change my tone to being neutral on the daily time frame chart. It's still possible that we could persist for a higher low, but I would say the risk of look above and fail really starts to become magnified if we're not holding that 606.75. So that's what I've got for you on the daily time frame chart. Let's get a little bit more granular here on the hourly time frame chart where we can see with a little bit more detail exactly what's happening on that Tuesday breakdown, right? So here's Friday's session, which was completely balanced sideways in range. And what I want you to do is put yourself in the shoes of a buyer or a seller. Doesn't matter which side, but what are you going to do as either one of those traders, right, if we break underneath Friday's low? You're probably thinking if you're a short up here and you've started adding shorts on Friday's session, Tuesday comes along, we've got this balance, we're not really breaking out. You're probably adding on the breakdown of Friday's low. So sellers are adding there. If you're long from the Friday consolidation, you might have a stop loss underneath this area. So what does a stop do? If you're long, stopping out obviously adds selling pressure to the market. So in theory, sellers should have the advantage if we're breaking underneath the Friday low. And what do we see actually takes place into the close on the Tuesday session? Notice I had to extend this just to include that end of day rally, right? It's a complete failure from the sellers. Sellers are unable to materialize on a thin structure retracement, offering a pullback to a structurally relevant level, which again would not invalidate the daily trend. We would still be thinking about a higher low there at 606.75. But on the hourly chart, sellers are unable to capitalize on that momentum. So do we have any signs of stronger sellers participating in the market? The answer is no. We could take it another step further here and analyze the open of today's Tuesday session, where we open underneath the base of the spike from Tuesday, right? So Wednesday opens inside of the bulk of the range from Tuesday, not in the spike area, which is up here. And we'll see this on the market profile in just a moment as well. If we had stronger sellers in the market, this should have trapped buyers at the high of Tuesday's rally, And in theory, that leaves overhead supply. The auction was not successful in continuing in the upward direction there. So the fact that we open in range and do not find a lower high rejection under the base of the spike for a move back down to the equal lows through the equal lows for the breakdown of the hourly trend, right, which would just offer a daily high or low opportunity here still at 606.75, is quite telling also. Another indication that stronger sellers are not here. And instead, what do we see? A clean structure to the upside, finding a higher low over 611, which can clearly be seen as the Tuesday morning high, but also the Friday high of day. And that's a bullish structure. So no big bearish action to take here on the SPY daily chart, the hourly chart. If we throw on the intraday anchored VWAPs, what you'll notice is that we're above the entire cluster. If we come in from the very last gap down in the sequence, which was CPI of last week, of course, we're well above all of this. If we do see any sort of pullbacks, I would say as this progresses over time, it might not be quite that steep, something along these lines, right? If we get an anchored VWAP that looks like that, maybe over time, if you're looking for the breakdown, perhaps, right, we can go out on a limb and we can extend the pattern and say, okay, maybe it's a head and shoulders. Very, very speculative as of right now. But perhaps there's a scalp on the short side. Not a big new money short, oh my goodness, the market's crashing, going to zero. But there's a scalp underneath the neckline, perhaps, if it fails the anchored VWAP with a lower high underneath for the thin structure retracement. That's from point A to point B. Now, I would pose the question, when we get to point B, what's the action we want to take? We want to be thinking about the daily trend. We want to be thinking about the opportunity for a higher low after setting a higher high in the daily trend count. So I would not be an aggressive bear from point A to point B. I would trade this as a thin structure retracement perhaps, but really the reversal off of point B, something that maybe looks like this, let's just play it out in full. The reversal that looks like this is far more compelling in the upward direction, trying to long this and trying to long this over here. Concerns would emerge out of this market, just to give you the Armageddon situation, right? It's something that looks like this, set a lower high under the breakout level and, right, it's that and component, breakdown underneath 606.75, larger concerns would emerge for the market as we've described thus far in today's episode. Let's come in from the bottom of the move up to the top of the move. 38.2 from a Fibonacci perspective. Not quite beautiful confluence with 606.75. It's about $1 higher. And you can also see the 61.8 line in the sand is about $1 higher than our 603.25. Absolute, like, no ifs, ands, or buts about it. That's a dangerous level on the daily perspective now, right? So not in love with the Fibonacci's. I would say that price structure is going to rule all, and we will watch for the following outcomes, as I've already put on the screen a number of times: consolidation and continuation. We will look for any sort of like quick looks underneath that fail again, like such. If we do get some sort of lower high that persists like this, we will trade a scalp from A to B, but more so interested in the reversal off of 606.75, then following it up with a potential Brigade bolt here for continuation up into blue sky territories. Remember that the measured move from the daily balance range we were just describing is closer to 625. Let's take a look at the actual divergence now, and this can play both ways. Again, I think that it's very important we keep in mind the sucker's long concept we talked about in the intro and we just talked about on the daily time frame chart. But if you're not familiar with the market internals, check out the video tutorial in the top right-hand corner, and let's dive into it here. We're primarily concerned about today's market internals. What we have from a price action perspective is a trend in the upward direction. You can clearly see that volume flows were actually negative on the session. The advanced decline line was in negative territory as well. The index score was negative in the morning and hardly flipped to positive into the afternoon. It's a very weak read here. A strong read is going to be up and over 20. So as we're getting this trending session, volume's not confirming, advanced decline line's not really confirming. The index score is iffy. I'd call that more neutral than anything else. And if we take a look at the ticks for today's session, a majority of them were underneath the zero line almost all morning as this was trying to resolve outside of the previous day's range and value. The tick was negative. You can see the cumulative build here was negative as well. Right? It does end up closing fairly flat around negative 635, but generally speaking, this is the first big divergence that we'll cover in tonight's episode. This is not giving a warm and fuzzy feeling that this breakout should be massively successful or will seek continuation. Now, we all know that at the end of the day, or I should say the beginning of the morning when the bell rings at 9:30, the only thing that pays is price. Price is the only thing that pays. So the pathing that we've outlined here is going to persist, but understand that today's move in the upward direction is happening on weak underpinnings. So although we talked about, yes, sellers didn't really see an aggressive breakdown on momentum here, we could flip the script and we could say, okay, yes, we don't have sellers, but do we have the strongest buyers we've ever seen? Do we have everything firing on all cylinders across the exchanges? The answer is no. So please, one more time, be careful of buying this up here for the suckers long at the highest high in the trend count when we know, based on the data we've just explored, the market can technically pull back. It's not going to violate the trend. The market internals were kind of lackluster, but a pullback, as we've just said, doesn't invalidate the daily uptrend. We haven't seen stronger sellers stepping up. You could frame it this way as well. We'll finish on this note for the market internals, then we'll move along to profile. You could say something along these lines where you say, all right, if the volume flows were out, if the advanced decline line was negative, if the ticks were certainly negative through the morning session, then flip the script here and say, okay, then why were the sellers unable to break down from the opening range in the first 15 minutes of the ES? From today's session, right? If I just do something that looks like this, let's make sure we can see this in the lower quadrant. Notice that this is just an opening range, right? Or initial balance, whatever you want to call it, doesn't matter. You have bearish internals as this is taking place, and yet the market rallies. So it kind of cuts both ways, but for the most part, I think the bottom line that I've hopefully been very, very clear in getting to at this point in today's episode is just simply that you've got to be careful buying the highest high of the trend count. I think that the higher low is generally speaking the safer way to participate in trends 9 times out of 10. Sometimes if the intraday setup is good enough, if we can find a Brigade bolt on a 5-minute chart up and over the previous day's high, sometimes we can pull that off for tight enough risk reward. But generally, bottom line, based on everything we've covered so far, it wouldn't be shocking if the market pulled back. But we also understand that a pullback to here does not invalidate the trend. As a matter of fact, I would be looking for long opportunities off of 606.75, as we've covered in great detail thus far. Let's quickly check in on the market profile. Would you look at that? We got to go to full screen. Here we go. That's better for our ES futures. One of the things that's actually quite compelling about this happening here, if I just make sure we can see the Thursday session, is that value has progressed higher after last Thursday's push in the upward direction. Recall that in the Saturday update video, we talked about how value area was left lower in the individual session, and then Friday follows it up with acceptance higher. Well, Tuesday has also seen acceptance higher. Notice that the value area low is spot on basically with the Friday low. This is after the J period liquidation that we were just talking about on the hourly time frame chart. You can see that there's not much volume commitment through J period. The value remains sideways, not lower. And on today's session, value is overlapping to up, overlapping in terms of the previous day's Tuesday's range, right? I was talking about the spike on the hourly time frame chart as well. If I zoom in here on the back-to-back Tuesday-Wednesday session, this is the M period spike I'm talking about. So the base of the spike is here. Today's opening print is this small white triangle down here. It's that A period print. In theory, if stronger sellers were involved in the market, they should have produced a lower high under the base of the spike, rejecting this auction, calling that a failed auction higher, right, at the all-time high basically, and then we would have seen a downside rotation. Well, what's the reality of the chart in front of us? Value and the point of control both move higher relative to the Tuesday session. K period lacks a little bit of, we would say it lacks meaningful excess. Same thing on the B print low. So for the most part, I think that the structural charts we were just describing over on the S&P 500 are going to light the way. If you want the level here in the ES futures, of course, we could start thinking about this zone, the spike base basically, which is at 61.44. 61.44 is the level that we used in the morning session, and that's what we'll continue to use until proven otherwise. Currently, and again, this is obviously subject to change, we've got about 12 hours to go until the bell rings, but it's currently the overnight low as well. If that can hold, that would be very nuanced and probably suggest that short-term momentum buyers are in control of this market. So if we can hold here, maybe risk reward back up to the previous day's high, something along these lines could be a trade. But understand, buying it up here, chasing it at the highs, if you miss the entry here, I would be very, very cautious of buying this at the highest high. Let's get back on over to the platform here. Let's take a look at the QQQ. We've covered divergence number 1, which was the market internals on the S&P side of things. The QQQ It is not divergent. The Russell is. We'll talk about that in just a moment. But one minor divergence, I wouldn't read into this too much, is just that the overnight all-time high was not taken out, whereas the S&P 500 did take out the overnight all-time high. This, generally speaking, represents the improper end of the auction, so we'll carry that forward at 541.30 here out of the QQQ NASDAQ. Generally speaking, though, if we think about the same questioning we applied to the S&P 500, let's do this a little bit faster this time. Is there anything bearish about this chart? The answer is no, right? The base case trend is that we have lows, we have higher lows, we have higher lows happening here, and we've broken out through the equal highs, the top end of the balance range. Of course, the next best higher low in the trend count is any sustained hold over 533.25, seeking continuation in the upward direction. If this does just consolidate sideways inside of a 2-day range, basically Tuesday and today's Wednesday session, we will look for follow through on some sort of intraday action. We'll take a look at the hourly in just a second for that. The upper edge of the weekly expected move is at 546.93. Something to keep in mind here outside of the expected move is just simply that if this is a balance range, right, doubling that balance range in the upward direction probably brings in a target that's much closer to about 553. One more time, not forecasting that we go there tomorrow, the next day, or even the day after that, but over time, that's a potential target from a measured move point of view. Let's drop it down to the hourly time frame chart. What else can we learn about the QQQ NASDAQ? Very balanced session on the Tuesday, which is sort of, a little interesting note here is that Tuesday did not take out Friday's low of last week. Friday was not as balanced as what we had in the S&P 500. The NASDAQ saw a little bit more of a trend. So the fact that this low is so precise, to me, technically makes it a mechanical low. It's weak in that sense, where if we test 536, I would expect a breakdown there, but breakdown to what? A breakdown to the top end of the daily balance at 533.25, where we know we're seeking some sort of daily higher low, something that looks like this to participate in the long side. If the market's chopping around through this 2-day range, I'm inclined to be very neutral on the QQQ NASDAQ there. Reason being is just because of the precise lows here, representing a weak level. If tested, it should break. We're open-minded to the potential scalp, A to B, and again, you got to be quick draw McGraw for that, but the better trade, still just seeking higher low pullbacks. That's really the name of the game here out of the market, is where's the higher low? How can I get involved with tighter risk reward? And do the internals perk up? I think something that we should have covered, but maybe didn't so much over on the S&P. And, this is a late night episode, so bear with me as we ramble a little bit on some of these things. In the S&P 500, if the internals confirm on a pullback here, let's just say that we get this sort of pattern happening down here. And again, it doesn't have to be inverted head and shoulders. It could be double bottom. It could be a hammer candle, right? It could be whatever. But if buyers start stepping up at 606.75, based on what we just talked about with the internals not confirming this move here, the internals would need to confirm buyers stepping up on the higher low pullback. Otherwise, becomes a very risky play to get involved in. So thinking about 606.75, thinking about market internals, let's get back over to the NASDAQ side of things. I'll give you the game plan pathing over here, and then we'll move this thing along. So we know the consolidation in this 2-day range is pretty sideways. Brigade bolts that can start suggesting higher low holds over the previous all-time high, 539, are interesting just because it's the upper 50 percentile of this range. Obviously, the overnight all-time high acts as a first target, but beyond that, we have the measured move targets we were just talking about. Where do larger concerns step in out of the NASDAQ? I would say you would need, not just a non-hold of 533.25, but a failure underneath 530.25. Reason being is that this is a clear retest level as well. In theory, the market could still do this and offer a daily higher low. I'm not going to be able to capture the very lows, but you get the idea. Higher lows were happening here. Higher lows were happening here. We could still persist for higher lows at 530.25 on the daily time frame trend, right? So that's what we have out of the NASDAQ. We can take a look at the the Fibonacci's here. The sequence is aligning beautifully with the 533.25, reinforcing that level, 61.8 line in the sand at 530.25 zone as well. So all set from that point of view. Let's check in with the market internals for the NASDAQ side of things here. We'll notice that we have a little bit more of a solid display of strength, at least in terms of like being positive here, trending a little bit more cleanly instead of just going sideways in negative zone. It's still negative out of the advanced decline line, don't get me wrong. The ticks, not really much improvement over here, still closing out negative on the cumulative build as well. So little divergence out of the NASDAQ, not for the S&P 500, but literally for its own index, right? Not unreasonable to see a little bit of a pullback emerge. If we take a look to finish it up at the NQ futures, and we do something along these lines just so we can see where value's been stacking up, it does persist in the upward direction. Hold, sideways hold, higher on today's session as well. B period has much better excess than what we saw in the S&P 500, and your J period liquidation break is not really an excess low underneath this area, making it mechanical, right? So that's all set here out of the NASDAQ. Let's move back on over to the platform. Let's finish things up with the IWM, which is another divergence that I was mentioning in the big three from the introduction, right? And what we're talking about here is just the fact that not even from the sense that the all-time high is here and we're currently trading in this lower range down below, but just the fact that we have not even attempted the top end of the range here as the other two indices are breaking out to new all-time highs. We're not even close to a test of 230 out of small caps. So it's not to say that the rally needs to fail over in the S&P 500. That's not the point of calling this out, but it's just not as bullish as it could be. So one more time, the actionable thing, the main point I'm trying to drive home is do not be the suckers long with no pre-planned stop buying the highest high in the S&P 500 with these two divergences we've covered so far. There's one more that we'll get to in just a moment. So inside of the New Balance range is, something worth considering. We know, and we've been talking about this in the pre-market preps, that the intraday selling has not been rewarded, right? Being a short intraday is not a good idea here. We've been seeing recoveries back into the New Balance once, twice, instead of lower highs underneath and lower highs underneath. As of right now, it seems as though the market's trying to suggest a higher low hold here now over 225. So if that's the case, then a range rotation probably just sets up the move to 230. And if that happens, then great. That's going to confirm S&P 500 strength. But if it doesn't happen, if we just stay here underneath the weekly key level at 227, which has not changed now for months, if we're underneath that and breaking down under 225, again, small, it's a warning shot across the bow for the S&P 500. If we take a look at the hourly time frame chart, notice the difference here with the anchored VWAPs, right? Just not even close to being above the entire cluster. We're tangled up in the cluster. It's completely sideways. It's really preventing, I would say the best thing that could happen here on the IWM for the end of the week is show some clearance over 227. Get away from the anchored VWAP cluster. Get away from the daily 50 SMA. Show some clearance from that. Maybe the 230 rotation is bullish for the S&P, but as of right now, there's really no stronger argument to make here in the small caps other than sideways in this range. We can't really read into it as there was a look below and fail or anything of the sorts because there simply wasn't. Sellers did not attempt to get underneath 225, which could be construed as something bullish, but I would want to see a failure pattern here if I'm going to make the bold claim in a balance range that we need to see the opposing move take place. You could argue, okay, here's look below and fail number one, here's look below and fail number two. It's just, a matter of time before the top end of the range. But on a day-by-day approach, why didn't it go then on the gap up from Friday of last week? It faded off in its entirety. We talked about that on Saturday, right? Let's jump on over to the market internals for the Russell. You can see we're flat to lower here. We're in trend, not in trend lower zone, but we're negative out of the internals there. Advanced decline line, cumulative build also in the red. Not really a shock here if this acts as a headwind breaking down tomorrow. Again, keep in mind what that means for the S&P 500. Let's move along to, of course, the Rusty Russell through the lens of market profile. Now we're on the market profile, we could say it. Let's take a look here. Main takeaway on this one is that, so we want to go a little bit further. There we go. The value on the attempted breakout session, so this was Friday of last week on the gap up, was lower. Where's value been since then? It's completely contained inside, right? You can see that this is inside the Friday range. This is sideways to lower. So value has not really made an attempt to continue in the upward direction, whereas in the S&P and the NASDAQ, it certainly has. So underneath these lows, and you can see it's the A period single print string down here as well, we've been using 2285. I would start using 2280 a little bit more firmly off of the single print base in here. 2280, 2278. If we're underneath that level tomorrow, it sort of opens the door for a headwind to the S&P 500. Let's get back on over to the platform. We're going to do a speed round for the sake of time through the remainder of everything else we typically go through. Weekly performance of the S&P sectors. We have healthcare leading the pack, not generally a risk-on indication. Energy just underneath, also not incredibly risk-on. Consumer staples just underneath, not really risk-on. This is a divergence that I was not even thinking about in the intro, but it is, maybe we could just say it's 4. Utilities, that is technically more of a defensive sector, right? Semiconductors are, outperforming the S&P itself, but not by a huge, it's not at the top of the stack in a sense where, okay, all of the gain here is being driven by semis. Then we have real estate, financials, industrials, tech. You can see at the very bottom of the barrel, it's the bonds. Then we have discretionary, communications, and materials. So generally, at the top of the stack here, These sectors all risk off, all D for defensive, another warning shot across the bow. Let's quickly check on the structural elements. I think that this inverted head and shoulders is a strong opportunity we want to continue to keep tabs on. Keep in mind that although it's no longer the second heaviest weight sector, it's still the fourth heaviest weight sector. We don't want it moving lower, and it's not exhibiting leadership literally at its own all-time high. So I'm not overly concerned with the weekly performance snapshot there. To me, I would say upward pressure is upward pressure for the S&P if this takes place. If we take a look at energy, it's still inside of its range here. We'll be more concerned when a new swing high takes place. Getting there, upward pressure is upward pressure. XLP looks okay. Upward pressure is upward pressure. It's more about the posture here that's not a huge red flag, but a small white flag maybe. If we look at utilities, not pushing new all-time highs, but it is outperforming on the week. So again, upward pressure is upward pressure. As I look at semiconductors, I can sort of sigh a nice sigh of relief here and just say something along the lines of like, okay, we have the balance range. We're back at the top end of the balance range. We've moved into the gap. We're not continuously rejecting this gap. We're not testing. Oops, we want to zoom here. Thank you, Thinkorswim. We're not testing 237. We're okay. We're hanging on by a thread. So as long as this consolidation persists in the gap, continues to the upside, not the end of the world. I wouldn't look at the sector posture as being like overly alarming yet. Real estate, non-issue. Let's look at financials. Looks bullish, still near the top end of the range, threatening a possible equal high breakout. That is bullish and risk on. Industrials, non-issue, sideways here. As we look at tech, not really the best candle at the all-time high. A little bit more of a doji, indecisive at the all-time high. I would like to see firmer acceptance up here, but keep in mind we have a wall-to-wall move, point A to point B, with hardly any pullback in there. Any consolidation in here that then makes a break for it in the future is still bullish as well. So keep in mind the structure out of the XLK. As we look at the TLT, not much to comment on over here for the sake of time. Let's move along. Discretionary really needs to pick up some of the slack. It's still in range compression with a weekly lower high, but also the possibility of weekly higher low. So resolve that and we'll have another piece of the puzzle for the market. Based on this attempt, I would like to see this that then turns this ultimately into a double bottom over time. Over 234 really starts to ignite that, in my opinion, in the upward direction. What are the laggards? Of course, it's none other than your Tesla. Let's take a look at XLC. Looks bullish, nothing to complain about here. Inside bars over the last couple of sessions. And the XLB, no issues. This kind of Brigade bolt is bullish through the thin structure, but it's the lightest weight sector we have, so it's not going to make or break the S&P as a whole. Let's quickly check in on the ratio grid. We'll just make note of any big red flags here. If you're not familiar with this, check out the video tutorial in the top right-hand corner. I like the recovery here. This certainly would be better if it improved and could start flipping the trend back to the upside. So small red, white flag. So let's go check mark. Let's go neutral on this, starting to flip into an X for bearish. This is still looking good over here. This is a non-issue as being neutral. Risk off sectors, we'll keep an eye on them. I'd say neutral as of right now with the possibility to flip to a concern. Communications look okay, and we ideally want to see some performance. Oh, I guess it was just communications. Brain is fried. That's what happens this late in the afternoon. Let's move along to the risk on. Individual ratios, this looks okay and bullish. This is more neutral. This is neutral to flipping bearish. I would say this is okay for now, and this also remains okay out of the ARKK. Cathie Wood's Innovation ETF, still signaling risk on there. As we move along to our dollar, thinking about fundamentals, dollar pulling back should be bullish for the S&P 500, so this is checking out, not bearish divergence from that perspective. If we take a look at gold, would like to see this pullback off of the known sets of highs in here, which would be fine. It would be less of a flight to safety trade. It's not really been a huge issue for the S&P in the meantime. As we look at interest rates, rates are non-divergent. They are acting fine, in my opinion. This move lower here is fueling the market higher, so all set, or at least alleviating some of the pressure, you could say. As we look at, we could go some fundamental stuff real quick. Here's the inverted ZT. This is not suggesting any big changes. If we take a look at the Fed tracker tool over here, there's really no shift in the probabilities. We know that we're still dealing with a high chance of a pause in the next meeting, and we're really more so concerned about where is the first cut. Is it the July timeframe? Is it September? Is it October? Where is it, right? As of right now, keeping tabs on that. I would say tomorrow morning's data, if we take a look at the calendar here, in terms of the jobless claims, has the potential to move that needle, as well as the PMIs happening here also into the Friday session. So not much on the economic front. We talked about this on the Saturday update video. I mentioned it earlier in today's episode. We really don't have catalysts that would suggest the market is like waiting for this big announcement that has the potential to move the market lower substantially. As we think about the earnings calendar, there's really not much here that's taken place yet. I would say that Walmart is probably a bellwether for the economy to some degree, especially noting that they were mentioning in previous earnings cycles, right, that more affluent consumers, households with 100K plus, right, have been spending there. Again, however you feel about the metric doesn't matter, but Walmart generally giving us some insight into consumer spend. Rivian, perhaps interesting here. After the close on Thursday, as well as Block, which the ticker has changed. It's no longer SQ, it's XYZ. Thanks, Jack Dorsey, for making everybody go insane trying to find the new ticker. That's what we have on the earnings front. Really simple, really quiet, not much going on there. In terms of continuing along through the risk appetite analysis, now that we've covered some fundamentals, not really seeing flight to safety out of the TLT ratio to the S&P as we take a look at bonds relative to themselves. Small upticks, possibilities for some holds here around the 50 SMAs. I would want to see some stronger, trend reversals if this is going to really go for it one way or another. So that either means set this as a lower high and show me the lower high and show me the lower low, so on and so forth. Or if this is just going to be a higher low in the overall trend count, like lows, higher lows, get me out of the neckline one way or another. As of right now, a little bit neutral out of these indications, not learning anything new. As we look at credit spreads, non-issue, there's no flight to safety. There's no big oh my goodness, it's risk off. Not seeing that from credit spreads. If we look at the HYG in isolation, this is the big bad divergence number 3 that I was mentioning in the intro. The smart money junk bond investors are seeing a lower high here, whereas in the S&P 500, we've broken out of the range. And typically, the HYG has had the upper hand. It's been correct a number of times, right? You can see that the HYG was suggesting this higher low where the S&P was breaking down. Anybody who shorted this got a rude awakening with this quick, snappy rally in the upward direction, right? If you take a look at some of the other ones that have played out in the past, this ultimately, SPX higher low here, whereas this was a lower low, led to further downside. So it's all about how you look at this, I suppose, and what time scale you're looking at it through. But this lower high I thought was notable and slightly divergent from the bullish posture that we were talking about on the S&P daily time frame chart. It's a back pocket idea. It keeps us open-minded. Is this oh my goodness, let's go out and short the market into oblivion? No, it's just maybe that a pullback could be in store sooner rather than later. Let's take a look at, let's move along here to Bitcoin. Not really much to say about this. Still in the range overhead, thinking about the bearish Sailor shift ratio signal still firing off. So we take a look at the range low breakdown. It's still 92,000, no change on that number. Let's take a look at breadth. Breadth has improved on the 50 SMA. That's the blue moving average, as well as the 200 SMA, but new highs versus lows are divergent to the new all-time high breakout we have in the market. I suppose if we really want to keep count and, let me know down below in the comments section. 5 bearish divergences I should have been mentioning in the intro. Let's take a look at the RSP as a baseline for breadth as well. This is not overly divergent. We know that the non-weighted version, of course, is going to lag. So if it breaks out through these equal highs, I would say that's confirming the all-time high breakout. If this stays in range, it's not the worst thing in the world. If it makes a new lower low, that's where I would raise the alarm and say, hey, we've got a red flag. Let's look at volatility. Non-issue on the floor. 15 has acted as a floor. Is there anything indicating that it might pop or perk up from here? Jobless claims are the only catalyst I could see if there's a big miss there, but I wouldn't forecast that. We've seen some anecdotal headlines, but it has not translated recently to actual numbers on the report. Let's take a look at volatility futures. Now that we have the volatility contract roll, one of the things I would just point out here is the fact that this black, or I shouldn't say black, but the darkest gray line that's showing up on the black background, there we go, is higher than the medium gray line. So in my view, that starts to suggest there's actually further contango deeper out in the spreads of the volatility contracts. And all this is plotting, by the way, for anybody who's maybe not familiar with what that is. It's plotting the difference between, let's get that off. There we go. It's plotting the difference between these different expirations, right? So in this first one, you have between, let's just say 10 and 93, and then 93 to 40, 40 to 70. So the largest spread, which is that deeper dark line, is actually here. 1870 to 1907 when it comes to at least plotting it relative to what's happening on this chart. So anyways, That's what the numbers are. All this would suggest is that the market's not really on edge or fearful of massive, like, okay, volatility is increasing here, we've got to button things up. Money managers aren't in backwardation dealing with trying to restrict capital flow. It seems more conducive to capital inflow to the market overall. Let's quickly blast through the core list of companies. Then I've got those 4 trade ideas I promised you in the intro, and you're on your way. Appreciate you coming out to the late night show. It's always a fun one doing it this late at night. So, NVIDIA. Not much to say other than full gap close, possibility for a higher low Brigade bolt over the 50 SMA, watching 134.75 closely. Not really there on the hourly chart, right? And the reason I say that is look at the hourly hammer that formed right off the open here this morning. So a test of the Friday high that was bought back up, kind of sideways though inside this range. I would prefer to see this turn into a micro double top under the neckline and show me the interaction here. I would be much more of a confident pullback long buyer at 134.75 if we can spot the setup, right? So show me the double bottom, show me the inverted head and shoulders, show me the hourly hammer, and we'll rock and roll from there. Daily 50 SMA as confluence. Let's go back to daily charts here. Let's talk about Microsoft. It looks like Microsoft's joining the quantum race, right? They reported they produced like their first quantum chip or something of the sorts. You can read the press release. You can go, Google it or whatever. See it. Googling something about Microsoft. Interesting, right? Anyhow, what's it doing? It's breaking out of this balance range. I still don't love Microsoft on the daily. This lack of trend is still just very, very apparent. I think maybe with a catalyst, we could start thinking about exploiting ranges along these lines. It's a matter of where's the entry now. If you take a look at the hourly time frame chart, I would tend to think that like a Brigade bolt here might be worth entertaining, and then maybe we have like inverted head and shoulders to reverse the daily trend. It's a possibility. This is just something that I'm continuing to monitor very closely for new developments of new setups. As of right now, this is about the only thing I can see that I might entertain as being the first way to participate, but really just not in love with the way the daily has been progressing here. Look at the moving averages, completely sideways and sad. No good. Let's move along to Apple. Apple releasing their new iPhone, 16e, the affordable version at $599, I think, is the price point. It's kind of cool, actually, and maybe tapping into a new market, being a little bit more competitive there, instead of like these crazy, $3,000 devices. We were reading about the trifold Huawei phone, right, in the pre-market prep the other day. Anyhow, enough. Time to consolidate time, right? It's late. In terms of the continuation after this move, it looks like healthy digestion to me up here near the highs than anything else. Consolidation builds this into a bull flag, and if that's a bull flag and this is a double bottom, over the neckline breaking out of the bull flag gets interesting for more thin structure retracement here over 247.25, 253.25 acts as a potential target. Want to continue to see daily 50 SMA holds. That's 241.25. Next up, Amazon, Nancy. Breakdown through the 50 SMA, but trying to hold in here for an inside daily hammer. If we could take that hammer high out, it's a good first step, but unfortunately, all it sort of suggests is, okay, if we get this double bottom, it's right into what? The overhead supply and the low at 228.75. So almost more similar to Microsoft. The idea here is to seek a new setup instead of like, okay, this is in play as of right now. I really don't love what's happening with Amazon. I suppose it's a hold of this horizontal level, which has a decent amount of price history. If you were to look at it on the hourly chart, you could see that as well. So it's holding some area of price history, but it's not overly indicative of a clean long that I want to get involved in just yet. I would say that the main idea could turn into this over time. Under the daily 50 gives me a little bit of that hesitation. Moving along to Google. Another one that's like, okay, what are we doing here? There's really not much going on these charts. We've been talking about it in the pre-market preps. We're in the mode of spotting setups. We're not in the mode of like, okay, this is in play right here, right now. We're looking for the entry, right? Maybe double bottom. Maybe there's something interesting, 185.25, but not second mortgage the house. This is not like an A+ quality setup here out of Google. Metaverse, let's take a look. A little disappointing here out of the Metaverse on the first test of its pullback. Second test of its pullback today, though, forming, some people call it a dragonfly doji, some people call it a hammer, some people call it whatever. Doesn't matter. Over today's hammer high could get interesting on a potential hold or a failure from the sellers to accept inside of this previous balance here under 704.50. If you take a look at the hourly time frame chart, right, notice that it's an opening drive, then consolidation for an afternoon high or low from here to here. So Meta is actually more of a trade setup that I would entertain if we're getting price acceptance tomorrow over 704.50 for a rotation back up towards this high, or I should say the top end of the prior highs at 726.25, probably with respect to this level in here at 716. 716 could be a minor level. You guys know that we draw these in as these sort of gray dotted lines. There we go. And then we're moving along. Next up, we have Tesla. Tesla on the daily time frame chart, as a reminder, is in a downtrend, so please be respectful and mindful of that. We have the potential for lower highs here. The main level for lower highs is remaining underneath 377. Tesla did display some signs of relative strength here in the morning session, but promptly faded off into the level again into the afternoon, right? So 358.50 holds the key into the end of this week. If we fail back down below that level, I would be all in, and I shouldn't say all in, let's be careful here, not all in on shorts, but very interested in shorts underneath 349. If we are consolidating above, then I think it's very reasonable that Tesla maybe makes the completion move for the major lower high on the daily into 377. Is there a possible long over this high? Absolutely. Let's just throw this in here at 365.25. And one more time, we'll go in with a gray dotted line. There we go. So this would be a potential idea if you're trying to trade long side, but please mind the lower high from the daily at 377. Next up, we have JP Morgan. Financials look great. We saw it at the sector level. Looks fantastic. Nothing to say here other than a beautiful higher low, holding over the previous all-time high, continuing to seek new highs. That's bullish for the S&P. Netflix, a little bit of a struggle here, but nonetheless, a Brigade Bolt, I shouldn't say Brigade, maybe Brigade Bolt from this point of view, back over the 1030 level and looking for the Stevie Wonder trade to potentially continue into tomorrow's session, back up towards the high in the opening print of the Tuesday open. That's at 1060, let's call it, for round number's sake. Did we hit activate by accident? Let's edit. And let's go 1060 for the sake of round numbers. There you have it. Moving along into these 4 additional ideas. One of them is a repeat from the Saturday update video. Let's start with TAP. Let's get off of TAP, please. Let's get off of some of the tech stuff for just a moment here and talk about TAP. TAP has this beautiful inside bar hammer from today's session. If we could take out this 60-60 mark, I would start thinking about this area of resistance acting as a potential trade into 62. So this probably isn't something you trade with options. The options chain is probably pretty sparse and thin. Let's just take a look. Yeah, I mean, we're talking about hardly any contracts of open interest, hardly any contracts exchanging hands on today's actual session. So it's probably a share trade if you are going to take this, but something along these lines here could be interesting. Over 60, 60, 60, 62 is the level. This is an earnings run that's getting consolidation inside bar. Brigade Bolt higher is potentially an idea here. Not interested if it never breaks 60, 60. Next up, what do we have out of BA, Boeing? Boeing was acknowledged, I think, by the president and Elon Musk about like, okay, you guys, forgo Boeing. Let's try to make Air Force One faster. Don't quote me on exactly what was going on there, but it is in the headlines. Nonetheless, hammer candle holding up over the previous pivot high from back here. If this consolidation persists, Brigade Bolt's over 187, target 196. I think this is interesting. If it's in the headlines, if there's some sort of, callback catalyst to it, I think these equal highs make a very solid target here. And, it's even like close enough to a measured move from this bull flag coming into completion. That's a little bit, I got a little trigger happy there with the drawing completion, but there you go. Something along those lines, well within striking distance, right? So that's Boeing. That's the second trade idea I have for you. The next one is AVGO, Broadcom, another popular name. This is the Swiss cheese chart, as we've dubbed it over on X. And we've got a hammer candle off the daily 50. I'm interested in the possibility of a range rotation from the hourly perspective. So here's the daily balance, right? This is daily new balance, hashtag not sponsored. If we take a look inside of that, though, on the hourly chart, what we're thinking about, or what I'm thinking about, you can agree or disagree, is the possibility for like double bottom, daily hammer, hold of the 50 SMA, over 230 should rotate towards the top end of the range. 238.25. From there, we'll monitor for continuation, potentially closing the gap. It's the full deep seek gap. Can you believe it? It's still in play up towards 242. That is AVGO. And then finally, the last trade idea, which is a repeat from the weekend video, is CRWD. Just because it's still somewhat in play. Would have been best if this gap up on this morning's session stuck over the previous all-time high, this shelf of consolidation. So this actually goes both ways for the remainder of this trading week, and I would really use the broad market as a gauge. If the broad market's weak, I would play this as a potential Brigade Bolt lower high, thin structure retracement, reevaluating when we get to 431. Shorts from point A to point B. If the broad market's bullish and continuing to break out to blue sky territories, I would be thinking about this. Same concept in the CRWD, CrowdStrike as a all-time high breakout contender that's over 453.50. I think we've done it. I don't know how we did on time. I hope it's shorter than the normal video length, but I'm going to stop talking. If you enjoyed today's episode of the Midweek Market Update, and if you know the keyword for the late night episodes, let me know down below in the comments section or by giving the video a very simple thumbs up. We will be live tomorrow morning at the 8 o'clock Eastern time frame for our pre-market prep episode. Come hang out with us for a pre-market game plan. Maybe not coffee and donuts tomorrow. We'll see what we have in store for next week. But with that said, I hope you have a green trading week, and I will see you in the next one.